Hi, everyone. Welcome to Inside the Deal, Healthcare VCs to Watch. I'm Carrie Nixon, founder and managing partner at Nixon Law Group, where our focus is squarely on digital health innovators who are building the future of care. This video series is meant to spotlight investors who are not only backing great companies, but are also helping founders navigate the complexities of building a successful company in the health tech space. So I am thrilled to be joined today by Kristi Ebong, who brings a unique and powerful lens to health tech investing through her work at HealthX Ventures. Kristi and I met at a conference a while back, and I can definitely say that she is a healthcare VC to watch. We're going to dive in. Kristi, welcome, and thank you for joining me. I'm so glad to have you.
Thank you so much for having me.
We're going to get to it. Most people that I know in the healthcare innovation space are passionate about creating positive change in healthcare. And I suspect it's safe to say that the same applies to you. I would love to know where your passion for digital health and health tech comes from.
Such a great question. I think like most of us in this space, I've got a series of personal experiences that definitely motivate me to want to make it better. On the business side, healthcare is almost 20 cents of every dollar spent of US GDP. And so there's incredible opportunity to change things for the better. I also think it's one of these areas of our lives that affects all of us at one point or another. It's unavoidable. You know, we could say death and taxes, but the death piece actually involves a lot of healthcare stuff. And so, like most people, there's an element to that perpetual problem solving that excites me and keeps me engaged.
That doesn't surprise me. I know that you are highly enthusiastic with the companies that you work with. And sort of speaking of that, can you tell me just a little bit about HealthX and maybe your investment philosophy and sort of what stages of companies you focus on?
For sure. We, at HealthX Ventures, we invest oftentimes first check-in or second check-in. We make early stage investments, pre-seed, seed, and Series A. Check sizes usually between $500,000 to $5 million. And we partner very closely with digital health tech, pharma tech founders to grow their business, help them really get the fundamentals down early so that they're positioned for beautiful scale. And it's been a wild ride. We've got over 40 portfolio companies. We've had already 4 exits in the last quarter. So it's an interesting time to grow. And we continue to make investments. I think we've got 9 companies now in our newest fund. And so it's never been a better time, in my opinion, to build in digital health.
That's great news to hear, right? This year has been a little bit uneven thus far. There's been some uncertainty, especially sort of in the first quarter, about what direction we're going, what the economy is going to look like, how people should react to that. So I'm glad to hear that you are optimistic about this year. And I think that'll give a lot of confidence to some of these founders. You have held yourself roles in government, in startups, in venture, in health systems. How has that sort of multi-pronged experience shaped your own approach to early stage investing?
Yeah, it's an interesting question because I think that there are several different archetypes of investors that can be successful. I don't know that it's one size fits all. And so I remember seeing a series of posts on LinkedIn a while back from a gentleman at Unusual Ventures that talked about 9 different archetypes of VC, kind of like a magazine cover. And one of the things that I've learned is that I have a strong conviction that for early stage companies in our sector, that folks with a specific lens and experience from an operating background within healthcare and health tech lend an ability to help and support companies and founders in ways that are far surpass maybe some other backgrounds out there. And so we have a strong conviction, especially at HealthX, around bringing a team of seasoned operators from the space that can help support founders in areas that are fundamental to their business. So whether that be finance and ops, go to market and regulatory, especially within healthcare and the life sciences, fundamentals around growth and making sure that they're getting connected to the right folks across the ecosystem, not just in the private sector, but also in the public sector, because they are the largest payer of healthcare services. So when you think about that 19 cents of every dollar US GDP spend, a lot of that is the government. And so it's interesting when you mentioned the market uncertainties earlier. We at HealthX have a fundamental belief that there are many foundational opportunities within the sector to invest in and improve that are inherently bipartisan, regardless of the talk tracks and the talking heads out there. And so we're making a lot of investment and putting energy into that space. And we're excited to see some pretty impressive growth very quickly in those types of companies.
Terrific. So how should founders think about finding the right investors? Not just getting a check in the door, but finding the right investors.
Oh, this is a relevant question right now as we've been navigating exits across the continuum with some of our earlier portfolio companies. You have to keep in mind, especially when it's an early check, that it's not unlike dating to marry, and that you're going to be together this is a 7 to 10 year return horizon. It's not just getting the capital in the door. That's what we all have in common. It's when things get rough, are you going to be able to take punches together and navigate some turbulence? And I think now that I'm more shifting into my midlife years and my mid-career years, that's one thing that's become very apparent as you navigate different market uncertainties, as you navigate hard things that happen personally and professionally. You need to have people at your wisdom table that you can rely on, that will look at situations as win-win, will have your best interests at heart, and think creatively about not just building the company, but also the deals and the milestones at each inflection point. And I think that's something that our founder here at HealthX embodies in an incredible way. It's been beautiful to learn from Mark Bakken and to watch how he approaches our founders and inflection points in just an incredibly creative and thoughtful way that I think is emblematic of coming from a serial entrepreneur background. And again, it's that operator energy and mindset that's willing to just break down walls, as cliche as it sounds, and find a way forward. And so I have really shifted my perspective away from thinking there is a particular archetype or pedigree of investor in that works well in our space, to really thinking it's part of it is culture and how you're. And the other part of it is, what is the skill set and the network that you bring to the table to really help them solve hard problems?
Yeah, that makes sense, because it sounds like what you're saying is founders can almost look at at least their early stage investors, maybe all the way through, as extensions of their team, right? Like maybe they have expertise that are filling gaps that their team has, for example. So that totally resonates with me. So what are some common mistakes that you say early stage founders make as they are going out to fundraise?
One of the biggest mistakes is perpetually fundraising. And it's an easy one to make when the markets are hard and capital might not be easy to come by. I think having a fundraising strategy, sticking to that strategy, pivoting when it's not working, is really important. And I say that because the more that you are out there fundraising, you're not focused on commercializing the business and refining the product or service.
Yeah.
And the reason it's a real problem is because it's hard to do. My team knows if they want to send me to the moon, it's to have a company just fundraising all the time. Drives me nuts. Not because I don't understand it, but more because it is such a distraction from the fundamentals of building the business. And so working with those at your wisdom table, those on your board, those advisors, the people around you, your mentors, to come up with a really strong fundraising strategy. And sometimes in our space, that's not always venture capital. There's non-dilutive funding opportunities out there, even with some of the headwinds with the new administration. I keep a close conversation with some folks in Washington about those non-dilutive funding opportunities. And there's other ways to finance a business to get through some rough spots. And so I do think one of the biggest lessons I have learned as well in the space is that sometimes when people approach digital health, they assume I'm going to get venture capital to fund my company. And that's not always the right financing mechanism. Venture returns and expectations are rigorous, and the margins required and the profitability required are rigorous, and the expectations behind that. And so I've seen many a founder maybe approach that funding process because that was an assumed step in the zeitgeist, as it maybe wasn't the most strategic thing to do. And some of the best founders are the ones that say, you know what, here's my strategy. This is how much I'm going to raise. It's going to get me to this milestone. And at that point, and I've gotten market feedback, I'll be able to grow from there.
Yeah, I think that's a great point, right? I think you're right that founders assume, number one, that they should be raising, and number two, that they should be raising all the time. I know I have heard founders say, I'm constantly out there, and they will say it's exhausting, right? Like, which I think it is. And, to your point, it is taking critical time and energy away from the business itself and solidifying the business. And so this notion of, is this company right for venture backing right now, is a really important question to ask. And you mentioned that, venture funds have certain expectations. And, it sounds like it may be the case that sometimes a company may just not be structured to meet those particular expectations. Does that sound right?
Absolutely, it does. And that's not to say that that is categorically the truth from day one till exit. I have seen some beautiful companies that were bootstrapped early for the first few years. And then something changed. The market changed, growth started to pick up, and they needed to shift their financing model. And so I think the takeaway is really don't make assumptions on the financing model without being thoughtful. The second piece to that is that commercialization in the enterprise sales cycles within healthcare and the life sciences are long. So that's not to say I go out and raise and I'm going to have runway for the next 18 to 24 months and everything's going to go to plan. A lot of times in our space, it does not go to plan.
Yeah.
And you have a talk track, a narrative, hey, we set out to achieve these things, these bumps came along, or we hit these bumps in the road, and this is what we learned, this is how we navigated it, and now we need a fresh influx of capital to take what we've learned and grow from here. And so it's not to say that it is an unforgivable process where you can't go out and raise again if you had a chunk of cash and you spent it. But I do think showing that you're thoughtful about, I'm raising this money to achieve these things, and here's where we're spending the cash. Here's how we're spending it. And then if things go wrong or there are things that we didn't anticipate, you're able to build that story and that narrative and show that you've been thoughtful about it. That, as an early stage investor, is more important to our team at HealthX than everything going right. It's more, okay, here we have a plan, we've been thoughtful, and then as things come up, we can navigate that with you. That's why we're here. But I think that a lot of folks try to follow a Silicon Valley style recipe without questioning where the playbooks are from or why they're there. And the reality is, as we've seen in the market and its constant shifts, that playbooks are not one size fits all.
Yeah, no, absolutely. It sounds like what you are conveying is that founders need to have a lot of grit, right? Like they need to be able to push through when they need to push through. They need to be able to react to evolving circumstances. So when you're looking at founders, like how do you assess that?
That's such a good question. Honestly, a lot of assessing grit is having a team that has it, right? And so our team is, everyone has a baseline of 20 years operating experience. And each person on our team has a superpower that's a natural talent that they are just really, really good at. And so for us, it's a little bit different in that we're able to bring that empathetic understanding of having a lived experience. I think there is also just conversationally, you get a quick feel for how someone is wired. There's being pitched to, and then there's thoughtful conversation that also shows some vulnerability around, here's how we're thinking about the business, but here's also maybe some things that could go wrong or things that have gone wrong and how we've reacted to it. If you're dating to get married and all you see is the big, sparkly, beautiful side of things, and then you get into the marriage and suddenly life gets real, you don't know how they think about difficult challenges. You don't know what their experiences are navigating them. That's a high risk to take. And so when we get to know founders, we want to understand how they think about navigating challenges or how they've approached the business thus far. Is that the case with every early stage fund? I don't know, but I know what we do. And I think that's a really great way, especially because our culture and archetype comes from serial entrepreneur and operating backgrounds. That is the only way to grow some of these businesses is, you're hit some hard times and you're going to have to fight through them.
Yep, absolutely. So is there a founder that you have met or an investment opportunity that surprised you? It came about in a very unexpected way. And I see you smiling. We've been joined by my paralegal, Rainey. So
yes, I've met many founders in unconventional ways. I'm thinking of one in particular when we were at an industry event about just over a year ago. We met through a mutual friend, one of the founder's early investors. I had no idea what the founder did. Knew his first name. That was it. We sat down and started talking. The mutual friend investor had said, "You really need to meet." And the founder started asking me questions. What are you interested in mental behavioral health? And I said, we're looking actually at peer support models right now, and that there's something very interesting there. To which he said, oh, interesting. What use cases within peer support would you start with? And I said, well, actually, we're running a sprint right now on it and looking at substance use disorder and addiction. Long story short, that happened to be exactly the platform that he had built. He was pre-revenue when we invested a year ago, and he's now at 10 million ARR a year. So it's been a serendipitous and a beautiful 0 to 1 story. And that, again, is one where we had some very real conversations out of the gates about how do you navigate these situations? What do you anticipate running into with the business here? What are my expectations and my team's expectations around commercialization when we're coming in pre-revenue? That's a big conversation to have because those time horizons can get dragged out. And so I think mutual friends, connections, meeting folks at events, we've probably seen a little bit of it all.
Yeah, I love when those serendipitous meetings happen, right? And they can often be facilitated by someone, who knows both parties and makes that connection. And I'm sure you make a lot of those connections yourself. That's really fun. So before we wrap up, I would love to know if you could rewind 5 years, what advice would you give yourself about investing in digital health?
Oh, goodness, 5 years ago, I think one of the biggest lessons that I've learned is that this ecosystem, which is hard to break into in some capacities and potentially intimidating to navigate, is actually ripe for lots of talent to come into it. And I don't think that there's a one size fits all for investor energy and background. I don't think there's a one size fits all, although there are definitely strong patterns around founders. I like to look at patterns, but then I like to also question them and break them when it comes to investing. And so I would apply that both to myself and my career, coming into venture from a very unconventional path. I'm in a very different background, especially from a lot of the blue chip playbooks here in the Valley. And I would say if you're willing to roll up your sleeves and learn and just ask questions and figure it out, you could probably add a lot of value somewhere along the way. And it's having that fresh energy in the ecosystem that I think is exactly what healthcare and the life sciences needs right now.
Well said. That was very insightful. I want to thank you again, Kristi, for joining us. And I'd love for you to tell our listeners what is the best way to reach you.
Absolutely. You can reach out to me via email at Kristi, Kristi, at HealthXVentures.com. You can also connect with our EA, Alexis, Alexis, at HealthXVentures.com. If you ping me once and I don't respond, that's because I get thousands of emails a week. But keep at it, and would love to take a look and get to know you.
I know, I can't imagine. Here at my law firm, Nixon Law Group, we've spent the last 16 years working with founders at all stages of growth. And, we're always creating references like this to support that journey. So if you're curious and you want to learn more, check out our website or follow me on LinkedIn. Kristi, anything else before we go?
No, I really appreciate you having me, and a shout out to everybody who's working in this space. I know it's hard and know it's volatile, but there are a lot of people cheering you on. And so just keep going, one foot in front of the other.
Yeah, we're all making a difference for sure. Okay, everyone, stay tuned for more conversations with healthcare VCs to watch and all of the founders that are shaping what's next in healthcare. Thanks so much.